All right, welcome, Derek. How's it going?
It's pretty good, Joe. How are you?
Good. Can't complain. It's hot in San Diego right now, but nobody cares. Nobody cares that it's a little bit uncomfortable for a day or two.
I saw that big heat wave, huh?
Yeah, big heat wave. I'll tell you what, it's interesting because it is actually hot for us. By my house, I'm about a mile from the beach. It is about a high of 80 degrees. Not a big deal, right? We'll survive. I'll stand outside. I'll get
Right.
the wind. But I had to hold a meeting on Friday outdoors for 2 hours because we can't go into places. And I
Sure.
was about 30 minutes east of where I am right now in a town called El Cajon, 105 degrees.
Oof.
Um, I've never seen my kneecaps sweat before. First time.
Right. 2020. All
Yeah,
kinds of new and interesting things going on.
yeah. It's we're getting a couple layers deep into the twilight zone of the
Yeah,
pandemic,
the onion, peeling back the layers.
right? Well, this was an interesting week. Lots and lots of stuff happened. I'm trying to piece it all together. Again, it feels like the twilight zone. Some of the stuff I feel like already happened 2 weeks ago. I was like, wait, no, this just happened on Wednesday.
Right. Too fast, too furious. It's like,
Yeah,
but movie number 7.
right, right. So big first thing that we had here is we got Kamala Harris, and I believe I pronounced that correct.
Well, Joe, you should know you're from California.
Yeah, good old Kamala, laying down the
Yeah,
law.
this was big, and I'd say interestingly drawn out, right? We were waiting to hear who the VP would be for weeks.
Yeah,
So big news, obviously. Question is, does it help or hurt his campaign? What do you think?
I didn't look like much. Oh, for Biden, yeah, I think that was the right. I think it was the pick for him, right? I don't think he. I think if he goes with any of the other candidates who are a little further left than her, he loses the middle too much.
Yeah,
She fits all the check boxes. Plus, I think she's a pretty solid candidate in general, right? So I think that was the best choice for him to preserve the middle. Everyone on the far left, they're sticking with, they're voting. And if I could run as the Democratic ticket, and they're taking me over Trump, right?
right.
So
Yeah, I think this is fascinating to me to take a page out of the headlines book. I read that and I thought, wow, she's going to be president in a year or two, or whenever, Joe obviously is going to have to step down. The
it,
odds are still that he wins, right? But it doesn't seem like he's completely with it. Yeah, and he's an old guy, right? So the reality is there is a possibility that if he becomes president, he doesn't fill the term, vice president becomes president. This is literally what I thought, right?
it's funny because I remember having those thoughts when Trump was elected, saying, "Well, when he goes to prison in 2 years, Mike Pence is going to be our
Right.
president." But yeah, it's interesting.
Yeah.
You know,
Well, either way you look at it, right? So the probability that Joe Biden runs for a second term if he wins, I would say is about 2%. So then ultimately you're looking at the next candidate.
right?
So it's fascinating to me, right?
Yeah.
Uh,
Yeah, so Kamala's got some implications, and we already had a user or a viewer post a question for us before the show. So I think it'll be a good segue instead of kind of piecemealing. But right off the bat is, has the market dismissed Kamala as the VP pick?
I don't think the market's doing anything with it right now. It's clearly supported by a lot of Fed liquidity, and then is focused to a degree on what's happening with stimulus, right? So I think that there's this underlying belief that although we have been passed these stimulus packages, the Republican or the Democratic packages, the Democrats packages, something's going to get passed, right?
Mhm.
And so the market's trading on that. Interestingly, we had no movement this week, and Congress is in recess until September. So you could see the market price that in, and it's an options expiration week, which tends to potentially lead to volatility if markets go up or down instead of just staying pinned at the strikes. So I think we'll see a tell on the market. some people, you may see some tweets from Trump. Some people may talk about it in terms of, is this because of Kamala Harris or Joe Biden? I don't think so. I think it's just the underlying economy, stimulus, whether it's coming or not. And then the big mover this week, which is bond yields, right? So if those things continue to move, we're going to see some serious equity volatility.
Okay. So just as like a quick thing, somebody asked me earlier this week, why does it matter who gets the, who these the politicians going into place are for the market, particularly like a VP? So I think Kamala's big thing is she plans on taxing every stock trade, every options trade, everything would have some sort of a tax on it. So I think the concept behind this question, right, is really like, well, wouldn't that make the market a little weary? Is one of the big issues, right?
Sure. And I believe 100% as we get closer to the election, market is going to trade down substantially. Because right now you're still in this reflexive bounce from the drop. You got a lot of Fed liquidity, and that's part of the story, right? You've got stimulus, that's part of the story. The question becomes, if Joe Biden were to win, with Kamala as his VP, what would policy look like? And I think that if he wins, it's highly likely that Democrats take the House and the Senate. So you can make the argument that, yes, that's going to unleash a whole lot of stimulus, free money, just coming out as part of the platform. But the reality is it's got to be paid for in some way. So taxes are likely to go up. There's a whole regulatory issue. What will happen to businesses? So that's just not a pro business type environment, pro market type environment. So, you may not only see the market sell off now, but then after that election substantially, as the market starts to price into the individual sectors, what happens to them, right? Airlines, banks, and then also what's going to just happen with taxes, right? I mean, there's only one way they're going to go, regardless of what politicians are saying.
Yeah, and what's interesting to me is I don't really know that Biden and Kamala Harris are as anti-business and pro-tax as some of the other candidates that are out there. And so I think those two, for people who are looking at it, might actually be the best case scenario if you're non-democratic voting, right?
Right. So that's certainly the argument, right? That, you escape the Bernie Sanders candidacy, right? Or Elizabeth Warren, their platforms are extremely, far left, very socialist. The reality is Kamala Harris, some of what she said is pretty far left too, right? You're just talking about those taxes. She wants Medicare for all. So I think that story is going to come into play later down the line. Right. And you have to remember, if that party in general gets into power, you're assuming that, quote, Biden is going to be able to hold back some of the further left impulses of that party.
Yeah. So basically you're telling me I'll probably still have to pay back my student loans, right?
You probably won't have to pay back your student loans, but your income taxes are going to go up.
Right. Okay. Yeah, right. Same thing. I'll stop paying for healthcare, but I'll pay the government more money.
Right. And the reality is what's the effect going to be on a lot of people? Higher inflation, right? Taxes go up. You may get certain other benefits, but it's going to be a more difficult environment for the economy. Got it.
All right. Any other user questions? Post them in here and we'll get them answered. So let's see what else happened this week. So it looks like silver and gold kind of dropped a little bit, right? From the high.
Yeah, so this is a really interesting one. So we've been talking about it ad nauseum, buy gold, silver, miners. And then we talked about it last week and we said, okay, maybe not the right timing. And we had a huge crash. Right. So then the question on everybody's mind is
you did. You said right now is not maybe not the best time to do it. It was pretty spot on.
Yeah. Well, so then the following question is, hey, it crashed, down 10, 15%. Is it the time to buy? I'm not particularly in a rush to get into it right now. I think if you're trying to establish longer positions, sure, you can buy some. But the bigger concern here is what's happening with rates. And it's possible that gold and silver sold off because a lot of people had bought it and it's some positioning, right? People are selling, locking in gains. But I think that also what's happening here is it's trading with some type of correlation to interest rates. And interest rates went up substantially. I'd say that most people were assuming that the yield curve was continue to go down. The 10-year, breaking below 50 basis points, something like that. In the past 2 weeks, what's happened? It's gone the opposite direction. So we could continue to get this fear trade that rates go up. And when real rates are going up, that's not necessarily supportive of gold or silver, at least in the short run, right? So I think you continue to see some more volatility sideways, potentially another drop again. And I like the miners, so I'd be looking to establish positions there, but not really in any rush. And the reality is that traditionally, when the stock market is selling off, which is likely to happen in the next couple weeks, months here, silver tends to go down. So that'll be an interesting tell. If silver is not going down that substantially relative to the market drop, then you should really be accumulating that strongly. If it goes down substantially with the market, right, you get a better price opportunity, but that just means that that underlying bull trend there is not quite as strong as you may think it is.
Okay, that's definitely a good thing, good piece of advice, something to look for. Let's see. So another big thing. So we got Kodak, which was like this big story, got this complete reversal, right? Like they got a loan from the government.
Right.
They're going to start doing pharmaceuticals. Their stock shot up, and then it tanked. And then the government was like, yeah, actually, we're probably not going to give you that loan, and we're going to investigate this. This
Right.
seems like business.
So fade the news, right? And it closed the gap. We're always talking about these gaps closing. I mean, this was a massive gap. It gapped up from around $10 to 20 and then shot up to 60, traded all the way back down and closed that gap. It's below $10. And this makes me wonder, what was the stock that we were looking at last week that had a huge gap and we were wondering what's going to happen here? I forget. But question is, will we see the same chart?
Right. I'll have to pull that one up. That was one of the ones, and I'll segue right into this. We're not even going to be able to do this part anymore. I like to pull up these stocks that are number one on RobinTrack.
Right.
So that takes me literally right into my next comment here of news this week is RobinTrack is dead. It's
right.
No more. So yeah. For those who don't know, it's just Robinhood is a free app that everybody who's a non-sophisticated trader, or maybe some sophisticated, but like the guy next door, right, is using Robinhood to trade. And then they released a way for somebody to track all the trades that were being made, and they killed it. We can't do it anymore. We can't get that inside scoop.
This is a story as old as time, right? The concept is that you can front run other traders. So if you know what they're looking to buy and sell, you can try and get in ahead of them and buy or sell that flow. And then this is just new technology that's basically saying, hey, we're going to take a look at what everybody on our platform is buying and selling. And then we're going to put that information out there for them or anybody else. So it's interesting to me in the sense that, yes, Robinhood, very popular platform. You got tons of people trading on it that are new traders. So there's a lot of possibility here to create some strategies around that. And, it could be unfortunate for anybody who's been using that for trading, decision-making and strategy that's no longer going to get it. But the reality is there's lots of other stuff out there like this. It's almost as simple as saying, hey, what's happening on Twitter, right? You're looking at these stock symbols, you see which ones are increasing in volume, what are people writing about them, sentiment, things like that. So I kind of laugh and in the back of my head think, yeah, RobinTrack's dead, but definitely not Robinhood, right? That's going to be around until we get a huge, huge drop in the markets. And then you'll see some of those traders get wiped out, right? And then we'll have some turnover in retail. But, Robinhood, Schwab, Fidelity, all of these retail brokerages are posting huge numbers because you got a lot of new traders. And certainly with the markets going straight up for the past couple months, that's kind of reinforced this trend. So we'll see what happens when we get pullbacks in the market.
Yeah. Well, yeah. So those will fade off when the markets drop and people don't have money, or when sports return, right? That's my guess. Right. When we could go back to Vegas.
It could be. I'd be interested to see, over X amount of time, right? A year, do you lose more money in sports betting, the average person, or in stock trading?
That I would love to know that. You know what? I'm gonna guess. I'm gonna guess sports. I really am.
Yeah.
But all right, let's get. So it's interesting here. So the next thing, a lot of news. So literally a lot of stuff happened this week.
Yeah.
So no bailout, but I put in parentheses for citizens
Right.
because there are bailouts happening.
That's right.
But you touched on this a little bit, right? Congress is not in session. They couldn't get anything put together in time. There's been some executive orders that got signed, and nobody knows what the deal with that is. There's some payroll tax stuff getting pushed off. You got to read into it. It's not free, But anyway, just big news, right? This is something I think we were waiting on happening this week, and my prediction was actually that it would have gone through. And I was wrong, right? I was really surprised that they couldn't get this done before recessing.
Yeah, I'm surprised that the Republicans have not pushed up their numbers, or that President Trump hasn't done anything. The reality is, it's not in the Democrats' interest to pass any of these bills if the markets and the economy are up, right? Or they're perceived to be up, because that does not help the election on the Democrat side, right? If you're talking about change and new policies, you want to have lots of problems out there so that you can point to them and say, look, this is what the incumbent has done, and this is what we want to change. So it's certainly not in the Democrats' interest to do anything, and you can see that until markets roll over. On the flip side, the Republicans and the president, they want to get more stimulus. They want to get something done so that they can continue to further this rebound, and argue for the election that things are in a big upswing. So I'm kind of surprised that they haven't caved. So we'll see what happens. It'll be interesting how everybody starts spinning this over the next couple of weeks, because the guess is if they haven't done anything now and they're going to recess until September, they're playing a little Russian roulette.
Yeah, what an interesting world we're living in, where the Republicans want bailout money and the Democrats do not.
Right.
So, and then one last thing, I had so much news, I had to add this in the last second. Trump's brother died last night.
Yeah, sad. Yeah. So sad when anybody dies. So condolences to him and the family.
Right, of course. Interesting. No, not a lot of information beyond that. Obviously, it's a personal issue, but it's certainly news nonetheless, right? But let's see. All right, let's go ahead here. We'll go to the next part, financial terms explained. This is typically, just like basic financial terms or beginner things, but Derek's able to give us some more of a detailed view than you might get just searching something. So people hear about hedge funds all the time. What do they do? Who's involved in them? Why are they an important thing to know about?
So I'd say that the first part to understand about a hedge fund is that it's for wealthy individuals. It's an investment vehicle. So you need to meet criteria in either having a certain amount of money, could be anywhere from $1 million to $5 million, depending on what's going on, or a certain amount of income, right? I think it's 250,000, probably less for an individual. But you need to meet one of those criteria to be able to invest in a hedge fund, because it's a registered investment vehicle, which means that there's a person or entity out there that sets up this fund, and they go look for investors, and the investors give them money, and they charge a fee on it. And these fees tend to be fairly high, because the idea is that hedge funds can generate better returns than other investment vehicles, right? So ETFs, index funds, those types of things. And the important thing to remember is that, they're wealthy individuals that are investing in these things, and the strategies that are being used tend to be more complicated and complex than what normal investors invest in. So that is part of the reason why you need to have a certain amount of money or income to be able to invest in these things, because with that complexity comes risk. Right. So the hedge funds say we're able to do it a lot of times with less risk. But the reality is that if you're getting higher returns in some way, you are taking on more risk. So the reason that we hear about hedge funds a lot is not only because they're for wealthy investors and they can generate really high returns, certain hedge funds, but also because they tend to be more active in the markets. Right. So you have different types of hedge funds. Some of them are called activist hedge funds. They'll go buy stocks and companies and then try and force changes in management, right? So you can read about it in the Wall Street Journal or hear about it on the news, activist investors. They do that with countries, right? They can buy bonds of countries. Or also because they do types of investments like private equity, right? So they buy whole companies. And so you'll hear about them more just because of what they're doing out there in the markets. They tend to make the news more than your more passive mutual fund type investing, where they just buy and are holding for the long term.
Well, every time I think of hedge funds, I think of just short selling stocks. Why is that something that pops into my head when I think of that?
So when we say that they have better returns, better risk-adjusted returns, there are a lot of hedge funds that not only do they buy stocks or buy companies, but they also short stocks, or they'll short other financial instruments. They'll short bonds of companies or short stock against the bonds. So that's part of the complexity, right? So selling short stock is more complex than just buying stock. And a lot of times, hedge funds will put on multiple positions when they're trying to express a trade. Shorting may be one of them. But also you've got hedge funds who they just short stocks. So when we say activist investors go out and buy stocks and then try and change management or do something with the company, you've also got hedge funds that literally short stock and then they go out and they tell everybody about some type of perceived fraud at the company. Right. So short sellers saying, hey, these financials aren't really showing what's happening at this company, or, this company is going to run into serious trouble. We're shorting it. Here are the reasons. So that's probably why you hear it, because that will also make the news, or they try and get into the news. Right. So that investors become aware of the potential risks or the red flags, and then also sell the stock.
Got it. Okay. Well, that makes a lot of sense. Thanks for helping us out with that.
Yeah.
All right, so we'll move on to the real stock pick analysis. This is where we get myself and then other viewers to post actual stock picks that they've made and get some fresh take on it from Derek. Let me share my screen here. All right. All right, so this is a stock we talked about 4 weeks ago, beginning of July, maybe a little bit longer. Service Corp International. They are a funeral stock, and I'm bringing. Computer's dragging here. Okay, so this is the only chart I have here. When we talked about them, I believe it was in this July 5th area. Their stock was trading at $38. It hadn't. We brought up the fact that it was one of the only sectors I had found in my personal research that hadn't jumped back up to the highs before we dropped down here from the coronavirus. And since then, it's sort of jumped back up all the way. Well, not all the way, but pretty high. So I just wanted to bring it up. It's just an interesting one, a chart that maybe you can give us some insight at looking at it.
Yeah, so really interesting. Chart has trended up the past couple of days. What's fascinating here is if you look at it, it's run into resistance. And if we change the view and put it on a monthly, and we changed it from candles to lines, it looks like we are testing this resistance level. And if we close at the end of this month above, we'll call it this $48 range, right? Point right where we are right now, this could be a fantastic longer term buy, because it would be breaking out of a longer period of consolidation going back to 2018, and you'd see substantial upside. So when you look back on a longer time frame, you're able to understand what's the trend here. The trend is up, right? There's a secular long-term growth play going on here. And then the question is, what's going to happen in the short run here? And if we do break out of this resistance area or close above it, that's a good strong sign for the rest of the year. Conversely, we're bumping up against this resistance, and if you just look at what's happened in the past month, the stock's gone from 38 to 48. Wouldn't be surprised to see it pull back down. So usually you don't break through these things on your first run. So we could see it come back down, consolidate, could be down in the low 40s, testing that 42 level where it broke out from June, and then continue its uptrend. But either way, longer term, what you're looking for is this break above on a monthly basis of that 48 and a close above there. And then you're looking at blue skies.
Well, I'll tell you what, that's extremely helpful analysis for me because, I talked in depth. I've done a pretty good amount of research on some of these stocks, and I didn't pull the trigger. So after we had our talk on here, I just thought, I said, you know what, I'm going to hold, I'm going to watch and see what happens here. My big focus right now is trying to watch and look at, I keep talking about marijuana stocks, primarily ETFs. These funeral stocks are really interesting to me. And then through your insight, a lot of gold miners. But looking at this stock today, I'm thinking to myself, man, I missed a golden opportunity here. I lost $10 a share in trading opportunity. But I still haven't pulled any triggers. And hearing your analysis there actually gives me some peace of mind, thinking, you know what, you did the right thing, whether you intended to or not, Joe, by just waiting, because there's more information to look at here, right?
Yeah, I think it's important to think about the longer term trend, right? And the fact that if this thing is going to continue on its long term trend, there's lots of opportunities to get in. So if you want to de-risk it, you wait till it breaks out above that previous resistance and it closes above that on a monthly, right? So that would be the less risky way to do it. You could also say, you know what, it's had a huge run, I'm going to wait for a pullback or retracement and then I'm going to buy.
Right. Yeah, so I get in my head, what I start to think of is, if it drops back down again, another great opportunity for me who I like these funeral stocks to buy long term. But even if it kind of stays there, right, then what you're saying is I would wait for it to kind of break past 48 on the monthly chart, right?
Right.
Okay, great.
Close to break above it and close above it.
Break above it and close above it on a monthly
stay chart. Above it at the end of the month.
Okay.
Because what you can see is that going back from 2018 to the present, there's been price action where it's broken above that 48 level, but it hasn't been able to hold it. Right. So what's happening is, you got short run, a pop, buyers are buying, and then the sellers come in and sell it back down. Right. So you want to see the buying strength to hold it above there, and then that's your breakout.
Got it.
And generally you say, okay, I need it on a certain time period. And what is a really strong indicative time period? If it closes the month above all the other previous resistance highs.
I love it. Okay, so now all we need to do is see if I can follow your instructions properly and then hold myself accountable to it.
I mean, we're looking at the same situation here with gold and silver, right? It's going to be very interesting to see where they close the month. Because everybody wants to see them stay up here and show that they're breaking out of this long-term consolidation and base, right? I mean, gold, great example. It's more or less testing the highs that it hit in 2011, and we want it to hold up here and close above here, right? That shows that there's enough buying power. Unfortunately, could be not the case, at least for the next couple of months. Especially if you look at positioning, sentiment. I think everybody's talking about buying gold. It's all over the papers. Same with silver. Warren Buffett now has bought it, right? And so what happened with the airlines when he sold? They bounced.
Right.
They're still not doing well, right? But in the short run, if you want to be the contrarian, you would say, okay, this is not exactly ideal timing to, quote, buy these things, even if it does eventually break out. Which I think it will, but that's a strategy, perspective.
It's interesting, and this just popped into my head, so I'm going to throw it out there. We talked about the airlines still not doing well. I just flash back to this article that I remember reading when specifically United Airlines dipped below $20 a share. It's now trading, bouncing back and forth between 30 and 36. But the article said something like, United Airlines won't see $30 a share again until like 2028 or something like that.
Right.
Anyway, just a fun side track, but they were trading closer to $100 a share prior to all of this. So.
Right. Yeah. And it's interesting. You see a lot of these charts where they put literally the price like we have here for SCI, and then they will overlay at certain points in time, the cover page of Barron's.
Mm, right. Yeah. That okay. Yeah. Follow the news there. All right. Let's see. So the next one I have, and
Or
this is the
else,
last
and
time.
literally
Last.
whatever the next 3 months. Or on the flip side, it says, Amazon like never makes any money, and you look at that front page and that date, and that's at the exact bottom for that time period.
Oh, that's.
So, fade the news. That's the other adage that we always put out, and you could see it visually on a lot of these things.
Yeah, that makes sense. That's a good idea to look at too. All right, so we've got American Midstream. So this is a natural gas. We've talked about natural gas a little bit.
Yeah,
The big deal. The reason I brought this one up, one, it was the number one purchased stock for the day, biggest percent change on Robin track.
interesting.
Unfortunately, we'll no longer be able to have this exact specific information, but like you said, we'll find other ways to show you what people are doing and bringing up.
Yeah.
The other thing is a hurricane season. So,
Right.
So here's their chart. But Derek, maybe you can. You've talked about it before a little bit, but why do you think people are scrambling to buy this one? And is it a good pick?
It's a great question. I have no idea about the company itself. It could be that this is, leverage natural gas play, right? And so if you go and look at UNG, that's a ETF for natural gas. It's gone from $9 to $13. So it's almost up 50% over the course of the past month and a half, and likely a lot of that owes to strong hurricane season.
Right.
Potentially it was oversold when we got into the early summer, and we're having a nice rebound here. Hasn't passed the highs from April and May, so that may be gravitating there. Question to see if we can close above there over the next couple weeks. But when natural gas trades up, then you'll see drillers and any of those companies in that space, right, like pipelines, generally trade up with it. So this could be in sympathy. One of the reasons why it's trading up. Also, I believe Warren Buffett a couple weeks ago bought the assets of a company. I think it was Dominion or Duke.
Yeah.
For their pipelines, right? So this could be another sympathy trade there, thinking, hey, somebody else is going to see value and buy these things. So I don't know anything about that stock, but those would be my ideas there.
Yeah.
And longer term, I still like oil and natural gas. Unfortunately, the odds are these things are going to roll over here in the short run. I think that, especially because of what's happening overseas, we're going to have a re-rating of global growth. We seem to be hitting a point where all of these places in Europe and Asia, which had not seen a second wave, are all of a sudden seeing their COVID infections creep up. So I think there's going to be some concern for transportation, oil and gas, all of those sectors going forward, that we get some other lockdowns, or the reality is you don't need a government mandated lockdown for people to stop moving around if there's a fear of another wave, right? So if that happens overseas, in addition to what's happening here, we could see all of those transports, that complex energy trade down, and I think that would be a good entry point.
Makes sense. So we got a text in question here. I'm trying to get it up in the chat for us. And I think it's a good question. What do hurricanes have to do with natural gas?
So natural gas, oil, all of these things get affected because you have lots of production in the Gulf, right? In Texas, and there's a question as to what happens if some of these rigs or platforms have to shut down because of the hurricane or because of the threat of the hurricane. And then you have a lot of trading going on up and down the Mississippi as these things get floated around, at the major hub points also in Texas and Louisiana. So if there's any type of concern, then ultimately, you're going to have a supply constriction, right? Which drives prices up. So there's a lot of seasonality in it, right? Natural gas tends to, have these wilder swings as you get into summer and fall.
So then the thing I think of when I hear that is like that would even be that's like a short-term play, maybe something you put an option on or something you look to buy and unload quickly, right? Like you're not thinking, oh, well, we're going to get 50 hurricanes this week. Natural gas is king for the next 5 years, right?
Yeah, so we had talked about some options plays on natural gas earlier in the summer, and the idea was, hey, it's dropped below this longer term downtrend, and so it may be extremely inexpensive relative to where it should be, and then it may get priced up artificially if there's the perception of a hurricane about to hit or a nasty hurricane season. And so that's where you're looking at something and saying, is there a good risk reward in a trade here, right? And what do you want? You generally want some type of asset that's over or underpriced, or the risk is over or underpriced, and a catalyst, right? So the catalyst here would be, hey, hurricanes, they could affect the oil complex, oil and gas, in the southern US where these things seem to hit. And that's effectively what is being priced in there, right?
Got it. Makes
Could be
sense.
that, or it could be Warren Buffett. Everybody's just trading in sympathy with him, seeing value there,
Right.
right?
So,
I mean, those are two good potential catalysts, self-reinforcing.
we have another question for a stock pick here. So we love these. So it's this was before we started the show. This got posted up on our YouTube. By the way, we're live streaming on YouTube as well. So I bought a call option on Target earlier this week that was deep in the money. It's up 15% since they have earnings next week and are anticipating a share price of 154 from the current of 137. Should I hang on to this or should I dump it and take my 15% profit?
So the concept here, you buy a call option deep in the money. So it's less speculative, right? Options are speculative, but out of the money would be more speculative. So this is just getting leverage on the fact that you think that it's going to go up. You're not looking to double or triple. You're looking for, 5, 10, 20%, depending on, how deep in the money, and then what is the time period on it. So I think based on, what's happened here, expiration is probably not too far away. I would probably lock in half the gains there. That's a great trade. I mean, if you're making 15% in a week on something where you're not taking a whole lot of risk because you're doing it deep in the money, right? Then that's a good move. That's a good risk reward there. So I would be looking to lock that in. That being said, the overall trend on Target, as we like to call it, is good. So longer term, this is a good stock and a good company. And they, as everyone knows, have been open throughout the pandemic, right? So a lot of their competitors have seemingly disappeared, at least in the short run. So I do like the stock longer term. In the short run, though, the question is, did it trade up in anticipation of the earnings already, right?
Yeah.
So if you're thinking 154 and you're thinking it's going to go there immediately because of earnings, because maybe there's a catalyst where they bump estimates, that then all of a sudden becomes more speculative. But it seems like half of your play has already happened, right? So I just think if your expiration's further out, you could definitely hold it. But shorter run, you'd be more concerned that it's a buy the rumor, sell the news, where it then trades back down a little bit, right? Or some of the volatility gets sucked out, right? Because the options prices are always more expensive going into earnings.
Okay.
Right?
Yeah, that makes sense. Perfect. All right. So if we get any more questions, go ahead and post them in the chat and we will get them answered. Next, we'll go to one of my favorite sections, which is headlines this week. This is Derek has no idea of the headlines that I picked, and we just give our knee-jerk reactions to how these things affect the market, how they affect our lives. And they're really fun because a lot of times these things are really written in a way to force you to think something when in reality they don't mean anything even close to that. So I explain it every week because that's where we're getting new viewers. We want to let them know what we're doing here. So the first one we have here, Buffett's Berkshire buys gold miner Barrick, slashes Wells Fargo and JP Morgan, dumps Goldman stake amid coronavirus.
So I saw this, and the question in my mind is Warren Buffett buying gold miners because they're cheap, which they are, right? Or is he buying gold miners because he sees a lot of growth there, right? he's a
Yeah.
value investor, right? So number one, he likes to buy things that have value. They're inexpensive, and over X amount of time, they're going to increase in value. He likes to buy things that have good moats, good franchises, right? Like your Coca-Cola, your Apple. Those are the stories. So he's clearly buying Barrick because he sees it's got great franchise, great assets. It's going to do well over the long run. It's got value there. But I also tend to wonder, does he see growth here, right? Does he see this as almost a strategic, quote, macro play to say, I'm buying gold because I think it's going to go up. I think inflation is going to go up. And the interesting thing is you combine these two ideas, right? That he sells the financials and then he buys gold, and you say, wow, clearly he does not have faith in the financial system. He wants to buy gold. We don't know that that's the reality of why he sold the one and bought the other, right? There could be no correlation here. It's just he's looking at these individual positions and bought one and or the other. So I think that the story being spun is that, look, financial system is a disaster. You're going to have all these bankruptcies. The yield curve is going to be flat. You don't want to own financials. He's selling them. He knows that. And he also knows there's going to be so much stimulus and there's going to be so much, political discontent and economic, problems that you need gold to hedge yourself. So that's why he's buying gold. Mm-hmm. I'm not entirely sure that is the story, right? In the Buffett camp, right? But that's how it's being positioned in this headline. But I think the question is, does he see growth in gold, or is this just a longer term value play?
So for me, it was interesting because the first thing I thought of was what some of the financials actually did fairly well this week. Like Bank of America did pretty well.
Yeah.
I know that. And then there's this sort of concept floating around there, which I think is a little crazy, but there's lots of people talking about how Warren Buffett, he's past his prime, right? He's like the old guy on the street.
Right.
He sold the airlines at their low, at their low, and then they made a little bit of a bounce back, arguably, right?
Right.
And then now gold dumped this week. If you want to call it dumping, right? That's the phrasing people are using. It went down a little bit from how high it has grown.
Exactly.
And now Buffett's buying it, and I think my concept here is like, well, people are looking at it as like, oh man, like this guy doesn't know what's going on,
right?
But then hearing what you have to say is pretty in line. Kind of what I was thinking is like, well, first of all, he's not buying gold, right? He bought gold miners,
right? That's what we've been saying, right? Buy the miners,
right? So it's just really fascinating to see this article in juxtaposition with what people are saying on Twitter, particularly people who are new to the Robinhood traders. But it makes me feel really confident saying I'm going to keep adding gold miners to my portfolio for long-term growth, because I think that Buffett knows what he's doing. Right? I'm in camp.
Yeah. He's getting a lot of flack right now, and value has underperformed for decades, right? I mean, this has been a huge problem. I do think that fast forward 5 years from now, and the FANG stocks, Facebook, Amazon, Netflix, Google, Apple, right? I think those things are down. Will have gone down at some point at least 50% or more. And I think that the value stocks will go down, but then we'll have a higher rip off the base. And a guy like Buffett, who has done poorly, relatively speaking, value has underperformed growth, but has accumulated $150 billion in cash, is going to have an amazing opportunity to pick up lots of stocks with long-term growth. So I think you see all those net worth, charts, and then the stories about Buffett losing his edge kind of flip, right? And then everybody say, oh, it's the value comeback. And, it'll be interesting when we go out 3 years from now, 3 to 5 years.
Yeah, I'm gonna cut this clip and just play it for us 3 years from now. Put a reminder in my calendar.
Buffett is a huge owner of Apple, and he didn't sell. So, but that's a value company, right?
Right. Exactly. Well, yeah, exactly. Well, I think the moral of this comes down to what we, particularly you have been talking about since March when we started this is precious metals, right?
Yeah. I mean, that at least is like a solid secular trade to be looking at for the next couple of years.
Yeah. All right. Next article we have here: why stock market will rise another 5% before year end.
Yeah, I always wonder when I see these things when people say 5%, 10%, we'll drop 10%. What's with the number? Um,
Right. Well, we all know 22% of statistics are made up.
right, exactly. So it's a headline, right? So then the question is, why put out a headline that says it's going to rise 5%? Who's going to read that article?
Right.
Generally you're putting it out to say it's going to drop 50%, clickbait, right? Or it's going to rise 50%. So when I see something like this, I just wonder, like, wouldn't want to own the stock of that publisher.
Right. Oh man, I think who was this one? I think this was Business Insider, if I can remember correctly. Well, the first thing that pops to my mind looking at it is my eyes glue, or I look over at the VIX right away because I've noticed every time I see these, oh, hey, it's gonna drop, it tends to pop up. Right, this was our whole
Right.
talk last week, contrarian, right?
Yeah.
Uh, and so I'm like looking at the VIX now. I'm like, oh man, is it my time to get back in on the VIX and execute it properly again, right? or
Right.
properly for the first time, I should say.
I mean, incredibly cheap, right? Your original call, I believe, had been that you wouldn't see the market roll over until August.
Right.
We're
Yeah.
here.
We're here. Yeah. I'm gonna have to pull that clip and give myself a little bit of credit at some point here.
Yeah.
And my role is to be the fool typically on this show. So
No, I think it's an incredible opportunity to buy the VIX, right?
yeah.
None of the economic problems have been solved. We've kind of papered over them, and we're going into huge uncertainty, and I think that'll translate into a lot of volatility. The question is, VIX is historically expensive, especially as you go further out, meaning if you wanted to buy calls or puts or anything in that maybe not as much September, but October, November, December timeframe, right? So what do you do? And I would suggest you look at if you're going to do something like this, you look at potentially some shorter term trades, but knowing that you're going to have to do several of them to keep making this trade until it eventually, pops or drops or whatever it is, because it's very expensive to pay for the time frame, right?
Right. That makes sense. All right. And then we've got, this is a fun one here. We've got the USPS will reportedly halt plans to remove blue collection boxes until after the election.
Oh man, this is just so politicized. I don't even entirely know what's going on with the USPS. And I know obviously this all centers around the ballots. And I've been reading some stuff about the stimulus is being held up because we don't want money to go to the post office, and Trump's dismantling the post office. And this just amazes me. I mean, who would have ever thought we would be talking about the post office as some type of, political, problem or issue, right? The post office.
Right. Great. So I have
make these things up.
No, I know. I mean, to me, the again, it's been so politicized. It's ridiculous. Like, I don't think. I mean, I get it. In some places, polls are super backed up, and it's all like intentional. So they're like, "Oh, you should be able just to mail it in." The arguments I see floating out there are like, They're like pinning them against each other. They're like, "No mail-in ballots." Like, I'm gonna go. I want to vote in person. It's like, well, nobody's stopping you. You can absolutely still vote in person.
Yeah.
But anyway, so I made a phone call earlier today to try and get some sentiment from the post office. I've got some inside sources in the post department.
That's right. That's right.
I said, what's going on here? Are you being directed to not do things or do certain things? Or is mail coming slow? Are people complaining? Is medication getting delivered on time? And the general answer I had is everything's happening as normal, with the exception of in certain places, these mailboxes are disappearing, which is wild.
That's crazy.
On the ground level, sentiment is fine. Of course, this person acknowledged that everything happening is 10 layers above their head,
Right.
and their call, even above their immediate bosses. They've got some questions, but in general, they're like, yeah, the mail's going through, no issues. We're still delivering stuff. It's going in on time. Nobody's complaining to us about it, but the mailbox delivery thing's a little odd. So I took a quick poll from my postal service friends, just to see on the ground level, right? Like, what's going on?
Yeah. Well, I think that, talking about uncertainty and volatility, and I don't know if I've expressed this idea on the show before, but going into November, there's going to be an incredible amount of politic and uncertainty about the election, right? Even whether we'll have it. I truly think, people say, oh, Trump couldn't move the election, this and that. I mean, who knows?
Right.
And the fact of the matter is we're in this, quote, pandemic and massive economic recession. Anything could happen.
Yeah.
And that just general uncertainty or the politicking about it's going to create massive problems, I think. And it questions the legitimacy of the election on both sides, whether there are mail-in ballots, whether there are not. And look, the reality is market's not pricing this in. And this is just another one of those factors where it's important to be aware of it. But in the grand scheme of things, as an investor, just view it as another one of those catalysts, right? These headlines, right. And to say, hey, I'm looking more for price points, triggers, time frames, election uncertainty, and all of this is just one of many things that's going to be going on out there. Yeah. I think that the treasury market volatility is going to be the big story for the next couple of weeks. The bond market volatility, then it's going to roll right into the stimulus and all the blame about who passed, who didn't pass, right? And then all of a sudden, the next thing you know, we're going to be running right up into earnings season and the election.
Right. Oh man, what a time to be alive.
So lots of opportunities if you're a trader.
Right. Yeah. Yep. All right. So next one, so next thing here, we got our question of the week, and this is for you, Derek. And then I'll answer it too. So would you redo a shutdown for 2 months under the strictest conditions possible if you knew this would all end? And then to that same question, what if there was some doubt that even a 2-month strict lockdown would fix everything? Would you still be willing to do something like that, as opposed to just dragging it out the way we are?
Right. Yeah. So under the strictest conditions, if I knew it all end, probably. But I think that the likelihood of that happening, and I've always had the sentiment that we would never be able to shut it down, just because of the country that we live in, and that's not a good thing or a bad thing. I just don't think that's feasible or possible. So I don't think I would have ever gone for that extreme of a response to it. Especially, in the back end of that question, what if there were some doubt? I think that the only viable or the main reason to say that we're going to shut things down, at least for a couple of weeks, is if you have a complete inundation of the medical system, which seems to me the original argument was that, the hospitals will be completely overwhelmed. Right. And then people who need medicine in general, or, who have heart attacks or whatever, they won't be able to even get to the hospital. So, the knock-on effects, not necessarily from the pandemic killing the people, but just from its effect on the medical system as a whole, needed to be slowed down. Right. So I think that's a reasonable argument. But the concept that we're going to be able to get rid of this thing, or that it's so bad that, we need to shut down and then risk the entire economy, I'm not sure that's a great argument. And then, you do look at places like Sweden and you say, okay, well, they didn't do the lockdowns, and what happened? I mean, interestingly enough, the reality is people are going to kind of shut down on their own if there's that fear there.
Right.
Right. So, making these extreme moves and saying we're going to mandate that all these things are shut down or we're going to lock down, I'm not sure that's the right way to do it. And maybe there's an argument that American citizens are not as responsible as Swedish citizens. I don't know. But, I think that we live in a country that believes in, like personal freedom, right? And some responsibility. I think we could make it through it. I don't think the lockdown or shutdown is the way to go. I think we're going to have this discussion in the next 2 months. Mm-hmm. It seems to me that we've plateaued at a higher level than we were in the spring, right? And we're really reopening everything this fall.
Right. Interesting.
And I don't think we're going to shut down, right? There's just no appetite for it. And then, amongst the people that had that appetite, there's no real credible response as to what are we going to do about the actual, country and economy.
Right. Yeah, I mean, we're not going to. This is a nice. I like hypotheticals. So for me, this is a hindsight answer. Like for me, yeah, maybe in March, if you would have said, "Hey, look, we're going to shut everything down completely," there's a 50% chance this works, 50% chance it doesn't. I might do that. I'm not a big fan of government control, so I don't know that I would love ever that concept. I like to think in a perfect world, like the citizens would be informed properly and voluntarily take the advice. And so I would have been open to saying, yeah, let's lock everything down based upon the suggestion of for 2 months, because let's be honest, I mean, everything came to a halt for about 2 months anyway, right?
Right.
So I was like, okay, with hindsight being like, well, yeah, that's kind of what we did, except we did a really bad job of doing it.
Right.
And then, so that,
or reopen too early. Who knows?
Right.
You know, this question does come from most likely the Neil Kashkari interview this past week and his op-ed. So he's Fed governor, I think it's Minnesota, and he's more or less said we need to shut everything down to beat this virus. Right. And sure, yes, if you think that that's possible, but I don't think that most reasonable people think that it's possible to beat this thing. You know, you could potentially slow it down, but we're not going to lock everything down and get rid of it. This isn't New Zealand, and New Zealand now has cases. I mean, that's reality. Same with Hong Kong, same with everywhere else. Yeah. So, you know, then the economic policies and responses that he has are even further, you know, to the left, if you want to call it that, than most other Fed governors. So, you know, I don't even think his response economically is even feasible. He's like, yeah, let's just like print and print and print.
Right.
Like, yes, that works, but that's not how the system works. So then what are the ramifications of that?
Yeah, makes sense. The only thing I'll add to that, Derek, is this question came purely from one place, and that's my mind, because it's what I've been thinking. I've been talking about. This is my question.
Wow. So your mind is tuned in with like a Fed governor.
Right. I think this question's on a lot of people's minds. So, you know, I'm not going to say I'm a unique and individual on it, but I like hypotheticals. I like asking people questions because it makes you think about stuff and reflect. I'm like, oh, what would I do? But it is a good question. So, all right, next one.
I think your hypothetical that's going to happen is going to be, hey, when we get this vaccine and we're in this horrible third wave, are we going to mandate that everybody takes it?
Right. I don't think that's going to fly in this country. And we talked about that last week about what we would do with a round one vaccine pushed through, shoved through real fast. And
this is what's going to be the big debate, right? This vaccine's going to come out, and there's going to be so much pressure on schools and workplaces to say you need to be vaccinated. Or have your people vaccinated. There's gonna be all these questions about business liability, right? That this is going to be the debate of 2021. Vaccinate or not vaccinate, mandated. Is it legal to say that people have to have these things if they're coming back to school? If it's not, then do you have to continue to pay for virtual schooling for people that don't want to go, right? Can you fire somebody who's not going to get the vaccine? I mean, this is going to be the question.
Yeah, employment lawyers, get ready.
Right. We still need to figure out how to invest in lobbyists and employment lawyers is the new one.
Yeah, we're working on it. We're working on it. All right, predictions. Do you have anything for us, Derek?
Yeah, I think that Treasury volatility increases substantially. So the stories that you usually hear that there's lots of issuance September, you know, that's when things really start to move in the rates complex. Started early this year, and once the trains left the station, I don't think it generally slows down, right? So I think you're going to see a lot more volatility there. And then the question will be, how long does that continue before the Fed does something? And in the short run, what's the collateral damage too? We've already seen it in gold and silver, right? Could affect equities, could affect other commodities, you know, I don't know. But rates start to move, that's time to pay attention and say, okay, what is going to happen with all these other asset classes? And I think that the rate move has just started.
Got it. So I have a prediction. It's a one-off because I'm not versed enough to give the prediction like that. But my prediction here is college football. 50% of the conferences will postpone their start of their season to late September by the end of August. And by the middle of September, another 50% of them will have just canceled their seasons. So wow. That's my prediction. So watch DraftKings, watch all the other betting ones, because you'll see that spill over into some other professional sports. Because let's be honest, football's a professional sport.
Right. I mean, where's there more sports betting, on college football or professional football?
That's a good question. I would actually probably guess college football because there's just more general volume. There's more games you can actually bet on. There's more teams,
Right.
more stuff going on.
Yeah. Yeah, I mean, that could be interesting for Penn, for DraftKings. Then the idea would be, hey, if these things get crushed, is that an entry point?
Yeah, well, and my answer, that's what I'm watching because I think yes, right? I mean, we love to gamble on sports here in America. It's one of our greatest pastimes. And
There you go.
so if you get a better buying opportunity, which I think will happen, I'd look at it.
Well,
But
if you can't go to Vegas because it gets shut down again,
it's it. Do it from your couch.
right?
Even better. That's the way it's happening, right? People don't love going to NFL games anymore. They like watching them on TV because they can watch their fantasy football. They can do it all, right?
Yeah.
So, all right. Well, we'll be back next week. Thanks, Derek.
That's right. Looking forward to next weekend. I think we're gonna do in vivo live, right?
That's right. We'll be live in person.
All right.
Stay tuned.
All right. Thanks,
All right.
everyone. Have a good week.
Bye.